Hello, traders. Welcome to this new live streaming and YouTube video if you are watching the replay. Today we will explain a new strategy, a new binary options strategy involving two moving averages plus a little bit of candlestick patterns in addition to some price action. Okay, so it's going to be a very rich video. Keep in mind the strategy I'm going to explain. You can use it for forex and stocks trading. It has a very high win rate on stocks trading. In forex, it's decent. You have to stick to the rules and follow it to the letter. It's very, clear, user friendly, beginners friendly. If you're watching this video on YouTube as a replay, please do not hesitate. Subscribe, hit the like button, and if you have any questions, use the comments box. We will get back to you as soon as possible. So let's go ahead with the setup of the charts. Forgot to say, for all of you who are in my VIP signals room, at the end of this video, I will explain how to follow the additional entries, the additional signals that I send on the 15 minutes chart. I just want to give you a small tip because I know some of you on the additional entries are entering a bit late because they want to adjust the expiry time. So I'll give you a very easy tip to make this thing way easier for you to follow. All right. So let's go ahead and set up the charts and the indicators for today's strategy. First, you go to the chart type section, you select candles, you enable the timer and you disable the auto scroll. Next, you go to indicators, you press on moving average twice, okay, and that's it. So we have to change the setup of the moving averages. You go for the first one, you change the period to 200, moving average SMA. I prefer to change the color to pink, make the line thick, 2 pixels, save. The second moving average has a period of 20. I prefer to change the line to blue. The colors are completely up to you, and click save. So now we have both our moving averages in place. Next, so we will be using 2 minutes chart, expiry time 4 minutes, right? So you can change this over here. 4 minutes expiry. You can go for up to 5 minutes. For the purpose of this video, I will only use 4 minutes. Okay, let's add some pairs here before we dive into explaining the rules of the strategy and taking live trades. Keep in mind, this is going to be an uncut video. So whatever I do, you'll see it live. Whatever the result is, you'll see it live. No gimmicks, no video manipulation to show you unreliable and unrealistic win rates. So everything is as raw as it can be. Okay. So now that we have a few high payout pairs in place, let's go ahead and explain the strategy. So the thing we're going to do is this. You have two moving averages, the 200 SMA, which is the pink line, and you have the blue line, the 20 period moving average. The market, any market you are trading, is it forex or crypto or stocks or any market, it has only three things to do. It's gonna be either in a narrow state, which is a ranging situation, and then it will move to an up state, wide state, okay, and it will go back to a narrow state, okay, and it's either gonna come back to do a wide state to the upside, or it might make a wide state but to the downside, okay. So technically speaking, whenever you are in a narrow state, you should expect a move to the upside or to the downside. And whenever you are in a wide state, you should expect a pushback to the downside. Or if you are in a wide state from a sell point of view, you should expect a move to the upside. So the market has only three things to do: narrow, sideways, up, down. Three things. To show you a clear example that is happening right here in front of us, cat CHF. Okay. So look here. Here we have a narrow state. How do we define the narrow state? Whenever you see both EMAs are close together, you see there's no huge difference in distance between the 200 and the 20 SMA. This is a narrow state. The narrow state is also reflected by the price moving sideways, as you can see here. And then what did the market do? It pushed to a wide state. A wide state is whenever the 20 moving average is way far away from the 200 moving average. Okay? So I told you the market will always go from narrow to wide and back to narrow. So look what's happening here. The price is coming back up to the EMA. The SMA, the 200 SMA, it works like Big Mama, okay? You know Big Mama's house, and the 20 SMA is like the small kid who's going outside of the home, playing around, but he has to go back home. He has to go back to Big Mama. So so the 200 SMA is the Big Mama. It's like a magnet. So the price went from wide over here back to narrow state over here, and it's going sideways. Okay, so here what do we need to do when you have a narrow state like this? You have to get yourself a rectangle, and using this rectangle you should mark the highs and the lows of the previous 10 to 15 2-minute candles. In this case we have 1 2 3 4 5 6 7 8 9 10 11 12 13 14. We are good. So you will have a clear swing high and swing low strictly in this narrow state. What we need to look for, let me just change the settings of this rectangle. Save. What you need to look for is a clear 2-minute power bar candle like this one. okay, to take a 4 minutes sell position to the downside. Why? You should see a clean break above the 20 SMA and the close below the 20 SMA. Okay. Now, ideally, you should see the price breaking below the swing low, which is happening right now, and you take a 4 minutes trade to the downside. Hope this makes sense. Okay. Guys, if you are watching, I'll have to take an emergency call over here. So hold on. I'll take I'll pause a little bit. 1 second. Do I have a text feature here? Yes, I do. Is it something? Okay. Oops. Can I write? No. Come on, Epic Pen, help me out. Okay. So let me take 10 minutes break and I'll be back to you. Let me write it manually. 10. I have to take this phone call. My handwriting. Come on. 10 minutes break. I'll be back. All right. Let me mute. Okay, guys, I'm back. Sorry for the disruption. It was an emergency call. This is the beauty of live streaming, isn't it? Okay, I'll explain the strategy again. Let me remove all this. All right. So if you tuned in right now, if you're watching us right now on YouTube replay or live, I will explain the strategy back again. So you need two moving averages displayed on your charts. The first one is the 200 period moving average. So the period is 200, the styles is completely up to you. The second moving average is the 20, has a 20 period, can change it from here. Styles is also completely up to you. You click save. So these are the only two um, indicators that you need. Let me explain quickly how does the moving average work. Whenever you see a moving average, what it's doing is actually giving you it smoothes out the price fluctuation that you see on the chart. So the 200 period line shows you the past 200 2 minutes candles smoothed out price data since we are using the 2 minutes. The 20 period moving average, the blue line over here, shows you the price action of the last 20 2 minutes candles. Okay, so let me explain again how the strategy works. Let me remove those a little bit. So let's establish the basics of how the market works. Any market, forex, stocks, crypto, futures, anything. The market has only three actions to take. It can be in a narrow state, it can go sideways, it can go up, okay, from the narrow state, or it can go down from the narrow state. And once it reaches the peak of this wide state, wide state, eventually it has to go back down. No currency pair or stock keeps on going up and up and up and up, or down and down and down and down. It has to reverse at some point. So whenever you are in a narrow state, a move to the upside or to the downside is expected, and then a move back to the narrow state is expected, and from the downside as well, back to the narrow state. And then the market has only two options to do: either go back to the wide state to the upside, or go back to the wide state to the downside. And that's it. The market has only three actions, three options, three decisions to make. Okay, since we got the basics done, let's add again the 200 moving average and the 20 moving average. So to show you on the chart, what do I mean by narrow and wide state? It happened over here. So here you had yourself a narrow state, price moving sideways. You had your moving averages very close to each other. This is why we call it a narrow state. See that? The difference in space between the 20 and the 200 is very close. So let's say this is the 200 moving average, and this is the 20 moving average. They are very close and tight. So you have over here, you have a narrow state. So from the narrow state, we established that the market has only two options, two decisions to make. It's going to either go up to a wide state or down to a wide state. In this case, the market decided to go down for a wide state. You can see it, the push down, all the way down. So here you can see that the distance between the 200 SMA and 20 SMA is becoming wide. So what you see here is what we call a wide state. Okay. So what we do is this: we look for narrow states in the market. Like in this case, let me show you. You select the rectangle from the tools and you mark the swing high and swing low of the past 10 candles, 10 to 15 candles, no problem. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, I'll do it from here because this is where actually we got the narrow state. Okay, so here you go. Remember, we are on the 2 minutes chart time. So once you define your swing high and swing lows, the highest point and the lowest point, let me change the color of this baby. All right, the only thing you have to wait for is a clear break of structure over here from a very powerful bullish 2 minute candle. Now you should see at least half of the 2 minute candle crossing below your swing low and closing below it, and you take a 4 minutes trade to the downside. In this case, it wasn't a powerful break of structure to the downside, so you wait until the price goes back to the 20 line. In this case, the 20 line will serve as a resistance level. You wait for a clean break of structure over here with a powerful 2 minute candle without any wicks, any big wicks. Let me zoom in a little bit here. See that? You have a clean break, very powerful bullish engulfing. This is what we call a bear 180. So this candle overtook this powerful green candle and closed below this resistance line. At this point, you take 4 minutes, a 4 minute trade to the downside. Okay. So in this case, the price went all the way. For Forex, this is perfect. Okay. You can apply this strategy for Forex trading. So in this case, I would have taken the trade over here, a sell setup over here, stop loss here, and your first take profit is at your previous demand zone or support area. This is your first take profit. Once you reach that point, you move your stop loss to entry. You have a safe trade, or you can move it over here as well and keep on reaping the rewards. So this is another topic. Let's stick to binary options for now. So the market went all the way back here to this narrow state. See this narrow state? You have a clean break below. Let me adjust this a little bit. So here, guys, you select the last 10 candles, 2-minute candle, and you push your rectangle to the future. All right. So what we see here is a clear and powerful 2-minute candle breaking below this support line and closing powerfully over here. You take 4-minute trade to the downside, and here you go. You have a winning trade. Personally, I would go the last 30 seconds of this 2-minute candle. So whenever I see a strong push, 2 minutes. So when I see the candle has 30 seconds left, I will send my torpedo in for a sell. Boom, over here. Okay. Up to this point, I think it's clear. If you have any questions, please use the comments box or the live chat section for more. Right? Okay. So we discussed the uh, the powerful engulfing pattern to define an entry point. Now you have three options to look for when it comes to entry points. The first one, let me use the green thing, green color. I don't have a green color option. Yes, I do. Okay, so the first option to define your entry point, you need to look for the following patterns. You need a strong green candle forming and close, or red candle. Let me see. Let me forming and closing below your rectangle or above. Okay. In this case, look at this. No problem if it has a small wick from the top or a small wick from the bottom, it's okay. So look at this. All right. So this is a clear signal to go for a sell. It's very strong buyers, sellers signal. Now for buys, it's the opposite. You need a strong bearish candle, bullish candle to show. No problem if it has small wicks from the top or from the bottom. It's okay. The point is to have a very big body. This is the body of the candle. All right. This is one signal for you to enter. Second signal, if you are going for buys, if you see this shape, hold on. If you see this shape forming, long wick, and the small body at the top. If you see this pattern, this is a huge signal also. It has to happen above your box. See, it's happening over here and here. Now, it can also be a red candle like this. This is also a beautiful signal like this one to go for a buy. Okay, so you have two signals. Okay, if you see, for example, for a sell or for a buy, for example, those two. If you see two back to back pin bars, my drawing is a disaster, no problem. If you see back to back pin bars like these, long wick, long tail, small body at the top, closing red or green, no issues. This candlestick pattern has an 82% follow through rate. Whenever you see those, 82% of the time, you will get a strong push to the upside. Okay? I know it might sound a little bit complicated. However, let's go into trading using the finding setups and taking the trades. You will get the hang of it. It's a very powerful strategy. I like to use it a lot. So let's go ahead and find ourselves some setup to trade. So in this case, you see, you had the 20 period moving average going above. This is your zone. This is your swing high. And the strong bullish candle with a large body closed above. You take 4-minute trades, a 4-minute trade over here, and here you go, you have yourself a winning trade. So, as I told you, the market goes from narrow to wide. So here you had yourself a narrow state and it's pushing to a wide state. See here? Narrow state to a wide state. Let's look for easier setups. See this beauty? Love it. Look at this. You, let me show you exactly how to define your entry. So you get your rectangle, you set up your swing high and swing low. Okay. Let me change the color of this baby. I need the body to be transparent. Okay. So you have your swing high and swing low marked by this rectangle. Use the last 10 to 15 2 minutes candle. Your entry point should be anywhere below the 20 moving average and below your swing low. So look at this one. It's a strong, sizable. If you compare it to previous red candles, it's bigger and stronger. Okay? So whenever you have a strong bearish candle closing here, I will go in the last 30 seconds, 4-minute trades, you have yourself a win. Look for this sort of a narrow state. This is the ideal condition. If the price if below is moving below the 20, the 200 and the 20, this is also an additional level of confirmation. So this is nice. Let's look for something else. We need a setup forming right now. See this narrow state? You have a clean breach. Now for binary options, you can limit to the last 5 or 6. It's okay. It isn't rigid. So for this situation, this was a nice break. Let me look for a decent setup. This isn't the perfect setup to take. The 20 moving average is still a bit far away from the 200. However, you have downward momentum. Let me see this. Use your rectangle, your swing high and swing low. I'll use it over here. Let me see. We have also some upper wicks, which is nice. Let me adjust. Okay, so what I'm looking for here, so you have your swing high and swing low. I'm looking for a strong 2 minutes candle to breach the 20 moving average and close below it. Why is the screen not showing? I think we are back. Okay, so I need a clean breach from a red candle crossing and closing below the 20 moving average or above the 200. So you need a strong close below or above your swing high and swing low. Okay, so let me wait for this one. I like it. Even though I prefer the 20 line to be closer to the 200 SMA, still we will wait for it. I think it will push downwards. We have lots of topping tails forming. So let's wait for our confirmation and we will take a 4 minutes trade to the downside. It's happening. Beautiful. I need to break below the swing low. Come on. This strategy requires a little bit of patience. You need to focus on your charts. I try to take 2 or 3 trades for the sake of time. Okay, I need a strong close. I won't have it. No problem. We'll wait for it. I'll do something. I'll set an alarm over here and here. However, let me see what this one is gonna do. I need a close below the green. I need an engulfing candle or uh, uh, a pin bar with an upper wick. However, it's rejecting, so let's see. You can call this the fabulous four or the amazing four. Swing high, swing low, your 220 moving average. So these are your amazing four. This is how you select and define your setups and wait for your entry point. We are in a narrow state. The market has only 3 things to do. It's gonna go sideways and then to the upside or to the downside. It doesn't have more options to do. Sideways, up, down. So whenever it is in a sideways situation, It has two options, up or down. So now we are in a sideways, narrow state situation. We are waiting for a signal to see if we're gonna go up or down. My prediction is this thing is gonna go down. If we see a candlestick pattern according to the rules crossing over here or here, we'll take a 4 minutes to the upside or a 4 minutes trade to the downside. Simple. No rocket science. I'm telling you, a 10-year-old, a 10-year-old child can learn a strategy. I cannot stress enough the need to be patient, stick to your risk management rules, do not trade more than 1 to 3% of your balance, and keep your cool. Don't get into the fear of missing out mindset. FOMO. Don't get FOMO on the chart. It won't do you any good. Now I can adjust a little bit my rectangle since, okay, so this is my line for now. 1, 2, 3, 4, 5, 6, 7, 8, 9. We have 20 minutes of data. Perfect. You see, the more the pair is going sideways, the more the 20 moving average is getting closer to its big mama, the 200, the pink line. See, narrow state over here went down to the white state. So I need a clean breach here. This is nice. I need a second. Beautiful. Come on, push. Okay, let's see. Okay, it's breaching. We need a strong close below the green line. I'll enter the last 30 seconds of this candle if in case it keeps on going strong. You can enter at the close, no problem. I prefer to enter a bit earlier if I see a powerful momentum. However, I think this will reject due to this gap over here. Nice. Come on. So we are waiting for a candlestick pattern to show to be our confirmation to enter the trade. It's not happening. I need a strong inverted hammer with a long tail at the top or a strong bearish engulfing candle to close below the green line, the bottom swing low, for me to take the sell trade. Or from the upside, the opposite, a strong bullish engulfing candle or a strong hammer with a decently sized bottoming wick. Let's wait for the next one. Beautiful. That's it. It's retesting the zone. So let's wait. I know it might take a while. It is my purpose to show you everything live, uncut, unedited trading. I need a push to the downside. Okay. Do not take trades in this area between whenever you see the price moving between the 200 EMA, SMA and the 20 SMA. Do not take trades in this area. This is called the trap zone. Do not trade. Beautiful, it's forming. Hold on, I'm a bit late. However, I'll take it. So why I took this one? You see, very long topping tail bar, and the close is a decent size red body. Ideally, you don't want to see. Ideally, you don't want to see any rejection from the buyers. Ideally, so this was a mistake from my side. I shouldn't have taken this trade. Anyways, if we didn't have this, you know, rejection from the buyers, this would have been a very powerful trade. However, we still have lots of time left. 3 minutes left. So let's see. Let's find another setup. See, this is beautiful. Look at this. It broke. It broke below. Very strong. Engulfing bearish candle. You took 4 minute trade, and here you go. I'm not cherry picking, guys. This is something that's happening right now in front of us. Let's find a different setup. White state, stay away. Also, this isn't ideal. Another tip, try to trade only with pairs where the 200 SMA is a bit flat. Okay, this is too steep to the downside. White state, look at this, beautiful. Got yourself a power bullish bar, 4 minute trades, 4 minute trade, you have yourself a win. See how powerful for Forex or stocks? This strategy is completely has a very high win rate. Look at this push on the 2 minute chart. You have your break from here, boom, to the upside. Cash machine. Let's look for another setup. Nope. White state, stay away. White state, stay away. Nope. Trap zone, stay away. White state as well. Also trap zone. This is beautiful. This is beautiful. I like it. Let me see. Get our rectangle. Come on. Swing high, swing low. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Beautiful. Let me set an alarm over here and here. Let me see. We lost the first one. Let me see what's going on. It is still a valid setup to take. I'll adjust my rectangle. That's it. I'll also put an alarm over here. Let's go back to the previous one, this one. You have a very nice narrow state. The price is going sideways. So we wait. Flat 200 SMA. So I need my confirmation to happen. You have your swing high marked perfectly and swing low marked also perfectly. So I need a strong bullish candle over here to close above or below the green line. Simple. We need to be patient and stick to the rules. The last one was MAD USD. Let me bring this closer over here. Where is it? Okay, so we keep an eye on both. This is still a very valid setup. We'll wait. So we have two potential trades happening. I'll do the most common rejection point over here and the most common rejection point over here. That's it. This might be in a reverse. This might reverse to the upside. However, we'll stick to the rules. When using the strategy, you might have to wait for some time to get a proper entry point. However, it is completely worth it. See how tight the situation is? Very close together, both the 200 SMA and the 20. We need a strong close either above or below the green lines. Okay, we have bullish momentum over here. Do not take trades again. Do not take any trade when the price is still moving within the 200 and the 20 SMA. This is the trap zone. Don't take trades here. Wait for a breakout above or below the zone. It's happening right now. Very nice. Keep going. I need a strong close above the 200 SMA or I won't take it. Strong close. Come on, that's it. That's it. I'll take the trade. You can wait for the close of the candle, no problem. Huge buyer's momentum. Beautiful. Keep pushing. Come on. That's it. Nice. Decent. See, very powerful bearish, bullish engulfing candle. It broke above the 200 SMA and closed above it, more than 50% of it. So you have all the confirmations in place. You take the 4 minutes trade. We are still waiting for this one to unfold. Okay, it's happening. This is happening here. Okay, it rejected. No problem. At some point in time, the more touches this line gets, it's gonna get weaker. So you see, this is the first touch, second touch, third touch, fourth. The more touches you see on this support line, the weaker it gets, the stronger the breakout. I'm gonna go for a sell on this one, as it seems. This is going perfect. Very nice. Very jumpy, however. This is amazing. Come on, close below it. I'll take the trade. This is running beautifully. Beautiful trade. You see, we waited around 12 minutes to for this setup to enter in a trade on this. So you have to be patience is a very underrated skill between retail traders. You have to be patient. It's a must. It's not an option. Okay, we have a bull 180 happening over here. No problem. We'll go for two buys if it breaches this level. I'm forcing a little bit of I'm forcing the trades a little bit so I can show you how am I thinking. Very nice. I'll take the buy on this one, even if it didn't cross. This is a huge bullish engulfing candle over here. I'll take the buy. Take two more. This was a win. We won this one. Beautiful setup. Nice. Come on, close above. Beautiful, beautiful. See, Nice. This thing has a 67% payout. With real money, I wouldn't have taken it. However, since the setup was beautiful, I wanted to show you how things work. Fantastic push. Nice. Beautiful. Close. If you get a strong close here, the setup is very safe. Okay. Very nice. There's no way we can lose this one. Let's find another setup. This is beautiful. I'll take this one. This is a clean cross of the SMA. And we are moving with the direction of the 20, moving average. Nice. This is playing very beautifully. Why did I take this one, even though it didn't break above the green line? You see the size of this is a bullish engulfing candle. It is bigger than this one, 50% bigger, bigger than those, bigger than those two, bigger than this one, bigger than this one. All right? And it completely annihilated this bearish candle. So this is a no-brainer. Boom, over here, 4 minutes. And here we go. Three trades, one, and still pushing to the upside. You can also take your buy position over here. Boom. Let's see how it's going on over here. Okay, we still have time left. We also have a gap down, so this will reject and push up, most probably. Remember, you can never guarantee what the market will do. This is going to be our last trade for today. I hope the strategy is clean and simple for you to understand. If you have any questions, use the comments. If you are watching us on YouTube, please smash that like button and subscribe to our channel. Very nice push, beautiful push. So to recap, we had our narrow state over here. and we had a clean break from a strong bullish engulfing candle. So boom, we took our buy position over here. Ten seconds left. Beautiful push. And here we go. So guys, as you can see, we took let me check. One, two, three, four, five, six, seven trades, out of which five are winning trades, which is amazing. The win rate in this case is 72%. We made 9% in profit. What do I mean by this? We started with 100. Look over here. We started with $100 or points. We made 9.2 profit. So that's a 9.2%, even though some of the winning trades didn't have 92% payout. So these, see those three over here, 67%. So if we took those trades on a 92% payout pair, we would have made a higher ROI on our balance. At this point, as a professional trader, I would stop trading. Okay, you already made 9%. That's amazing. If you have a $1,000 balance, that's $90. Come on, guys. If you can make consistently, let's say $90 per day with a $1,000 account, 25 trading days, that's $200, $2,000 plus in profit by the end of your month, which is 220% ROI monthly, which is, come on, perfect. Okay, so let's stop for now. I'll be back in the afternoon, maybe for another live session. It will be in Arabic for our Arabic audience. So thank you for tuning in and see you on the next one.